But another stock which was a buzz in yesterday's trading session, that was Antony Waste Handling, after the company came out with its first quarter business update. Mahendra Ananthula, who's the Group President of Operations and Business Development for the company, joins us now to discuss the company's outlook going ahead as well. Thanks a lot, Mr. Ananthula, for joining in. The core revenue for the first quarter was up 11%. It was driven by escalations in tipping fees, revenues from fixed ships, also steady contributions coming in from the new collection and transportation project in Panvel, along with sale of power and waste to energy project itself. So this was the first in the series of steps that you had taken. What one wants to understand is how much higher can it be from here on when it comes to the utilization of your plants, further scaling up. So this first quarter revenue growth of 11%, how much higher can this be for the entire year?
Good morning to you and all your viewers. Thank you very much for the kind words. Yes, we are extremely bullish about the way some of the last two quarters have fared for us. And specifically talking about the waste to energy project, in the second quarter of the first year itself, we have successfully managed to stabilize the plant operations. And that reflects in the very high PLF of 89% in the second quarter. I mean, we expect that in the first year of operations, we can achieve a PLF of close to 80% on an annualized basis, and which is by no means a small feat, considering all power plants typically work at around 65–70% in the first year. So we are extremely pleased by that. And going forward, I mean, not only this plant, we are also looking at some of the new ventures, which will give us a very healthy growth going forward.
All right. Hi, Mr. Mahendra. Good morning and good to see you in. So you're saying that the PLF numbers are encouraging, which is good to hear. Now, could you tell us about this 25% growth rate guidance that you'd given? Given the start you've had to the year, do you stick to the revenue growth of close to around 25%? And could you outpace that? Or do you believe that there's an upside risk to the 25% guidance number?
I mean, just looking at the order book that we have, which is around 8,300 crores, we are very positive that we can clock a CAGR revenue growth of close to 20–25% over the next 5 years. So we stay, by and large, we stick to the guidance which we have been giving since last few quarters.
All right. Just to understand, the industry size is around 4,500 crores?
I mean, it depends. I mean, when you talk of industry, I mean, if you're looking at the processing industry, I mean, that's you can say probably close to 4,500 or 5,000 crores. But then the addressable market for us is the business of collection and transportation, processing. We are also talking of alternative fuels, recycling, and so on. So the large market size is extremely large for our business.
So your target market is how big, sir?
I mean, difficult to put a number because especially the collection transportation is a very unorganized market and more regional. But among the organized players, I mean, I would say that we are in the top 2.
What is the kind of volume that you are targeting to handle this year? I mean, the first quarter, if you look at your total municipal solid waste, the handle numbers were close to 1.2 million tons. On a quarterly basis, what is this number likely to be? And do you get paid per ton, or is it just a long format contract that you have irrespective of the tonnage here?
So, yes, I mean, it's by and large, the collection and transportation contracts are tonnage based. So we are paid on tons collected and transported. That's on the collection and transportation segment.
Okay. Oops.
Right, we just try and repatch that connection with him. So on the CNT business, the revenue billing is done on a tonnage basis, though an order book of 8,300 crores could keep the company afloat for 20–25% revenue CAGR over the next 4 to 5 years. 80% PLF is what they're targeting in the waste to energy power plant this time around as well in the entire year. So we'll keep an eye out on how this pans out, because it's an interesting business. Time and again, we do ask the management whether they have any impact of change in political scenario to their business itself or not. They say, no, these contracts are very long term and there haven't been much changes. It'll be very interesting where the growth comes by, largely because of the big move that we've seen in the stock over the last 1 year or so. It's nearly doubled.
Well, I think, what the street is excited about Mangalam is it's one of the only listed players in this space. They've been there for, I think, more than 2 decades odd. And now that an investment phase is over, the street is eyeing the growth phase. So I wanted the management's comment on that as well. For the time being, they've given us that number of a CAGR of 20-25% over the next 5 years or so. It appears that they're well placed.
Yep, I guess we have him back with us. Mr. Ananthula, you were talking about the tonnage outlook going ahead.
Yeah, that's right. So I was talking about the waste to energy project where we have two revenue streams. So we are paid a processing fee per ton of the waste that we get in our campus. And the second is the sale of revenue. So the processing plant like waste to energy has two revenue streams. The collection and transportation contracts are paid on per ton basis, by and large. 90% of the contracts in India are structured on those lines.
And what is the per ton sort of realization that you make? What is it likely to be? And what is the kind of tonnage that you are likely to handle going forward?
So, we don't give specific numbers on each project, but specifically talking about the waste to energy project, we get about 1,000 tons of waste, which is guaranteed as per the concession agreement. And we are going to process about 700 tons in our waste to energy plant. Okay,
all right. Mr. Mahendra, also, wanted to understand what about the margin outlook? You've been doing margins in the vicinity of around 20% for the past year. So a top line growth of 25% we have. What can the margin number look like?
So both for EBITDA as well as the PAT margin, our guidance stays. We expect to maintain our EBITDA margin of 22-23 odd percent and PAT of about 10%.
Okay, all right. And any quick update that you can give us with regard to the new venture you were looking at, the vehicle scrappage business? I think the last time you said you're looking at a capex of around 15 crores, but it's in initial phases. Tell us more.
That's right. So we have made progress since then. One key change that we did is that earlier we were planning to take private land on long-term lease, but then after looking at the risks involved in leasing land, we realized that we are going to take land in industrial area so that we have more longevity and sustainability of the project. So that's one change. We have already identified 3 land parcels for the project, which is going to be a recycling park, in which we will have the vehicle scrapping facility as well as tire recycling in the same project, in the same project area.
Vehicle recycling and tire recycling. Just before we let you go, what would the RDF revenue for the entire year look like for this year?
So again, we don't give specific revenue for various products that we have. But just to give you an idea, in terms of tonnage, this year we clocked close to 35,000 tons, which is almost 33% higher than the corresponding quarter of the previous year. Last year we sold about 130,000 tons of RDF. This year we're likely to sell about 2 lakh tons.
All right.
And
thank you.
And contribution in all those are continuously increasing.
All right, thank you so much for joining in. Wish to have a word with you after you've reported your numbers as well, so that we can get into the nitty-gritties of what you've reported and what you're likely to do going forward. But 20-25% revenue CAGR with margins around that 22-24% is something that the street likes. There has been a smidge of an uptick in the stock after an up move that we saw yesterday post your first quarter update as well. And that's the management of Antony Waste Handling. But with that, we'll slip into a short break. But as we do that, here's a quick programming note. Coming up tomorrow, which is a market holiday, at 9 a.m. is a very, very special offering. A big CNBC-TV18 exclusive just ahead of the budget. One of the world's top market strategists is visiting us in our studios. Chris Wood of Jefferies will make his bull case for India. And also, don't miss out on this exclusive chat between Chris Wood and D Street stalwarts Ramesh Damani and Utpal Chet. All of this on Wednesday, that's tomorrow at 9 a.m. only on CNBC-TV18.